What's going on out there, traders? Hello from the Darkside family. It's been a little while, but we haven't forgot about you guys. Wanted to touch on NU again. This is today's price action, as always. No cherry pick, no unicorn stuff. Today's price action right now. NZD USD. Simple play. Again, guys, all we do is talk about the importance of structure and patience. Structure and patience, the two biggest things, two easiest things to understand. It's just unfortunately nobody can accept how important they actually are. We're so worried about concepts and ideas and this strategy and that. Nobody just looks at the simple, easy things to do. And all of our videos show the same thing: the importance of structure, the importance of patience, and proper risk management. So let's dive into NU right now. Simple play right here. Let's just go ahead and identify the structure points. We got our low, higher high, higher low, higher high. So we're in an ascending price action. We can see markets going to the upside. So what are we going to do? We're going to anticipate price possibly changing direction from this. Why? Because structure supports the idea. And what does structure do? This is the last low that led to the next higher high. So therefore, we're going to anticipate some kind of reaction, something happening in this area that's going to send price to the upside and potentially give us a buy idea. Okay, now something else I want to point out to you guys is if you look a little closer into this structural swing point that I just mentioned, what are we not seeing? This is the 1 hour time frame. Okay, let's take a look at it nice and close. That's the 1 hour time frame. That's the 4 hour time frame. That's the daily time frame here. What you're not seeing, guys, you're not seeing an order block. Okay, you're not seeing an order block. You're not seeing an imbalance. You're not seeing any of the things that everybody nowadays tends to look for, and that's because it doesn't have to be there. I mean, there's no rules to the way the market works or the way price action works. So, to think that you're going to follow a set of rules for your plan, or your trading plan is just, it's counterproductive. People ask all the time, well, can I have a set of rules to know how to get into the market? Yeah, if you want to just basically let the market control how you're going to move against it. To have a set of rules means you're only giving yourself so many opportunities, in my opinion. You have to learn to go with the flow. You have to learn to look for many signs in the market besides an order block or an imbalance or a trend line or a Fibonacci level. You've got to learn to build your story. So some may argue, they might try to say that this could be an order block, this last sell before this kind of buy, but in reality that's not. An order block would be much more something like this, where you would see a sell off and then an actual push to the upside, or right here where there's actual push to the upside. I wouldn't call this an order block by any means, but again, people are going to say what they want to say, so that's fine. But there's no order block here, there's no imbalance here, there's nothing. It's just a structural swing point, which is just as important, if not more important than anything else. Okay, so let's dive into this. Let's dive into the anatomy of this swing point and see what took place in here to see if we can find ourselves an opportunity. Okay, so I always recommend going down maybe 15-minute time frame. Let's go ahead and back the chart. You might want to start at the 15, and then from there, if you watch our previous videos, you'll know what to look for. Look for imbalances or, anything in the market that might want to trigger price to move in the opposite direction. Don't really see much here on the 15. Go down to the 10. You see, you got a little something coming in here on the 10, this little imbalance right here in the market. Go down a little bit lower to try to refine the area. And then you can see that same area where the 10-minute imbalance was. There's also 5 minutes. So that's growing. That's kind of growing our focus on this area, because we're seeing that there's a multiple time frame imbalance. So at that point, we're going to go ahead and identify this 5-minute one with a couple lines just so that we know that it's here. When you find things like this, it doesn't mean you automatically take the trade as soon as price hits it. That's gambling. That is not trading. That is gambling. That's allowing you to be subjected to the market when you may not want to be, because people like to mark things like, how do you know when this area is going to get hit? How do you know that that's a good area? I mean, if the price trickles down right here and it hits this area at 4:55 p.m. Eastern time, right before the market's going to close on New York, why would you enter at that point? Why? I mean, people just think that this, because there's an area here, it just makes it valid. It's not at all. It has nothing to do with the area. It has everything to do with what happens before price gets to the area. You don't know what time of day. You don't know how much liquidity they're going to build before it strikes. You don't know if a trend line is going to come in. You don't know anything. So the thing is to have an idea of what you're expecting to happen around here, but you don't just set a limit and just say you're going to buy from here, because it's just counterproductive. It makes no sense. It makes no sense to just buy from an area without seeing how price reacts to it first. But whatever. People want to keep gambling, they can keep gambling. That's just a quick tip. But again, we're looking at the 5 minute, all right? Not really seeing anything but this imbalance, so that's a good sign. And then I would recommend that you go down to the 4, the 3, the 2, and continue all the way to the downside, maybe to the 1 minute time frame, which we'll do right now. And you can see that imbalance still continues to grow, which makes it a lot more valid for us. So as we go into the 1 minute, we can see that there is one final area here that we would want to watch for. That would be right there and right here. So let's go ahead and just change the colors of these just for the sake of the example here, so not to have them confused. We'll use that little aqua blue. Okay, so we've got two areas. We've got the 5 minute imbalance that we marked out, which we could also see as a 1 minute one as well if we were to move it to right here. Well, we'll just leave it where it was. So we've got those two areas to watch for when price does start to head into that area. We will look for long opportunities. And again, guys, patience, 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 and structure. That's really all you need to be able to trade at a high enough level to where you should be able to easily smash these challenges and just start making some money on this and stop frustrating yourself chasing the next ideas and stuff. I mean, if we can make videos like this, I can make one for you every day. But I mean, if all of our videos look the same and it's the same kind of content, same kind of stuff, don't you realize that it's happening every day? And it's definitely happening often enough to where you should be able to take advantage of it, So let's let price tie in, see how long this is going to take. Flip the price, go ahead and fly into our zone. I realize it's going to take this long. Here. All right, and again, what are we anticipating? Upside, downside, upside, downside. So this way, I don't want you to get confused when you look on your charts. We're looking at this situation here, where prices here, we would anticipate a visit and possible reaction from this area. So we went ahead and identified what took place in here and found our low time frame imbalances, which was the 5 minute and the 1 minute. So we're waiting now for price to enter into our zone to see what's going to happen. And here she comes. Now, this is when you want to be patient. People get excited and they'll start to look to enter the market. They'll start looking already to get in right here because it's close enough to the zone, and they don't want to miss the move. So you get the FOMO, you get this fake reaction, obviously, that makes you think that, maybe it was right if you did get in there. Maybe it's a Fibonacci level. I'm sure it is. Let's take a quick look. Measure out a fib. Let's see our levels. What do you guys say? Probably OTE or 61.8, right? Yeah, look at that, OTE to the pip, where it was 61.8. Okay, so it's OTE to the pip, literally. So this is what I'm talking about, guys. This is where patience comes into it. If you're just trading the ICT OTE level and you think that's what works for you, that's fine because it's going to work for you sometimes, But if your goal is consistency, you've got to learn to think outside the box. Okay, so clearly they get an intentional reaction at OTE. That didn't happen by chance. We just measured it together, and you can see what price does from there. It gives you hope. It gives you upside, and that's great. If that's the type of trading that you want to do and you consider this a good move, that's great. Move to break even, collect partials as soon as you can. But this isn't the move. This isn't the move. This is a move, but it's not the move. And that's another thing you've got to look at when you're looking to enter trades. You wonder why a trade goes against you. It's because you weren't in the move. You were in a move, but you weren't in the move where price was actually going to, in this case, make a new higher high. That would have been the move. This was not a move. This was just a move in the market, and it's going to come down into our zone. And that's why patience is key, because it gives you hope, and then it runs right after you. So that's just an example right there. But let's go deeper and let price come tie into our zone like we were talking about. We'll watch it on the low time frame as it comes in. Here we go again. This is where you want to be patient, because if you look, you'll see there's another trap. There was another trap right there. If you look closely and you know what you're looking for, you can see that right here there was another trap in the market where smart money concept traders saw this fake break of structure right here, okay, and they were looking to get long. They saw this. They were looking in here at low time frame imbalances, 5 minute, 10 minute imbalances, maybe on the 2 minute, whatever the case may be. Composite operator gave them just a bit of hope with a nice reaction. And another one, and then you know what's going to happen. It's going to come rip their heads off like always, and that's what it did right there. So again, that's why you got to be patient. That's why you've got to wait for your zones to get hit. If you're waiting on a structural swing point and you're anticipating price going in your same direction, how could you not think that it should at least at a minimum, come and visit the area that led to the next higher high that broke structure. It only makes sense. Okay, patience, patience, patience. It costs nothing to be patient. Okay, but it'll blow your account if you're not. So we'll watch price come in real quick. Dancing around, and again, there it goes. We just had our strike, okay? Now I know what happened on this one. I was watching it, so I can go ahead and tell you that our 5 minute zone that we spoke about before, this one right here, this 5 minute zone was exceeded. Okay, this 5 minute zone right here was exceeded, and we tapped into the 1 minute one below. But there's another thing you could also do to help yourself out. Even if you were going to trade this 5 minute zone, you should never be placing a buy order like this. You should never be placing something like this so that you can have a cool screenshot and say that you caught a 3 pip stop loss on NU. That's a complete waste of time. And you're going to realize why in a second, because you'll see if you would have done that, okay, on this exact example here, let's just move it over for the sake of this one here. It's just so you know where you were. If you would have done that, you could see what would have happened. You would have been tapped into the market. Let's go down to the 5 minute. You would have been tapped into the market. Okay, this would have been your area here. All right, and we're going off to 5. Remember, that was your little zone. So you would have been tapped in, and you would have been tapped out, and then price would have went in your direction anyway. And that's why it's so important that even if you're going to trade these small zones and you're looking to trade that style, you've got to at least at a minimum cover the swing. Cover the swing. Come down to here. Give it a little bit more. Who cares? Who cares about the size of the stock? You want to be in the move. Stop doing this. Stop doing this and paying your brokers all your hard-earned money, and start doing this and giving yourself a chance. You don't need to make 1 to 10 every day, and you don't need to make 1 to 20 every day. Not if you're trading real money. If you're trading a $100 account, that's why you're looking for that. But if you're even if you're just trading an FTMO account for $100,000, you don't need to make 10% a day. You don't need to make 10 grand a day. Make 10 grand a month, and then tell me how you feel. Okay, think about it like that. You make 10 grand a month, and then tell us how you feel. Forget about 1 to 10 and 1 to 20. It's not realistic. And the people that are posting stuff like that, trust me, that's not how it goes. You can catch those kind of moves, but it's counterproductive to only focus on them, because then you get left out of the market way too often, and you lose more than you win, and your psychology goes to hell, and you're just in a negative mindset. So get out of that idea. All right, so let's focus back what we were talking about on the 1 minute zone that we had identified previously, and that's where price actually reacted from very nicely. And even then, you don't want to just dive in. You want to really give yourself a chance, to see price react properly, and then look to get involved in the market. So here's our one. That was our 5 minute zone. Let's just go ahead and move down to this little 1 minute zone right here. This was our final one. So you could have caught one on that 5 minute play that we just showed, but you just need to have your stop below the low, like we said. But here we have the 1 minute one. And again, if you wanted to, you could take what I would like to call a risk on entry when price enters this area. Let's just let price get to where it was. Where we are, 15. Let's speed it up real quick. You can enter on it. Let me just go ahead and fast forward that. You can enter on a risk on position. I don't really recommend that. I would rather wait for confirmation. But to each their own. Maybe you're busy. Maybe you don't have time to watch the market. I don't know. But you should always watch. In other words, for price to come in and give you a sign that it's going to break structure and go to the upside before you just place a limit here and just gamble and hope that you're correct. We got to eliminate all the gambling we can when it comes to entering when you're trading only structure and only imbalances and order blocks. Okay, there's a lot more, way more confluences that we have on this trade. But again, that's for us to know and for you to find out. Everybody's got their edge in the market, but this all here alone can't help you. Okay, so we'll go down to low time frame. We've got the 1 minute. We've got our zone. We're anticipating a reaction from here, and that's what we get. Price comes in. Now, what looks like nothing to a lot of people, okay, this is actually a perfectly valid break of structure. Let me just go ahead and highlight this area to get rid of the lines so we can see what we're talking about here. Let's do this here. Okay. So remember, this is our 1 minute zone. Price just entered. Now, it doesn't look like much, but this right here is a completely valid break of structure, because we have what we've always said, and I've always showed you in the videos. We've got the lower low, lower high, lower low, the break of structure to the upside. Okay, that's what we have here. Where price breaks structure and then leaves our 1 minute little zone. And that's actually what takes place right here. You can see that this is a lower low, a lower high, followed by a lower low. It's not much, but it's a valid lower low. And price does come up and leave a 1 minute imbalance. And you know what that is? That's your entry opportunity. So even if you are wrong, it's still worth a shot, because, we're talking about, let's just look at the zone we're talking about, this imbalance here. We're talking about
Just get a long position. If I can get rid of this right here. We're talking about, if you were to get it right there, that would be 1.7 pips stop, which I never recommend. Okay, remember what we're going to do. We're going to put it to the bottom of the low. So we're talking 2.4 just for this little area here. 150,000 times worth the chance. Okay, I would take that any day of the week. It's worth a shot because it makes a lot of sense. Where do we want to keep it? We want our stop to be below this swing. Remember this swing we talked about? Now let's keep in mind where we are. This is our higher high, higher low, higher high. So we want our stop to be below this area by a few. Okay. So let's zoom back in just to see where we are. Let's go down to the 1 minute. And we'll see price tap into the zone. Let it move, let it move, let it move. Remember why we're watching this area, guys. 1 minute time frame, okay? 1 minute. And we'll see price go. And again, patience pays. Patience pays. You got to be patient. And you can see what price does. And you can just see how precise it actually does it. Okay, there was never any guesswork there. It came exactly where it needed to. And then you can see the Darkside rocket that follows it. Okay, and again, we call them that because that's what we do. You don't like it, call it what you want. But you can see price reacts perfectly, just how we would have anticipated, right into our zone. And it doesn't just come in once, it comes in a couple times. So again, we never recommend this. You want your stop to be a little bit lower. Who cares? 4 pips, make it 5 pips, make it 10 pips. It doesn't matter. Always remember to include your spread because you might not even get tapped into the market because of that. And either way, look at the move that comes from it. When you're in a position, guys, and the candles move like this, the market runs away as if it stole something, that's what you want to be in. Okay, that's when you know you're in the move and not a move, because that's big money entering the market. There's no choppiness like this or no choppiness like this or like this. This is real money entering the market, and that's the move that you want to be involved with. Okay, those are what we call our rockets, and you could just see just from let this play, and we're running out of time here, but let's just let it run out to where it went. We'll go to the 15-minute time frame. And price is now, again, look, it's such an easy, small, simple move. Price, it maxed out at 54 pips, 54.3 pips. And I did a 5 pip stop loss just to give us an extra cushion. But look what that is. That's 1 to 10. You see that? That's 1 to 10.8 in a matter of minutes, or well, actually it would have been an hour or two. But it just in a matter of a couple hours, that's the type of results you can get with patience and only focusing on structure. Now I would encourage you to watch this video over and over and then go back test it on NU. It's today's price action. It's right now, 1 o'clock Eastern New York time. And go find these setups and say, how could I have got involved in this? Because it's going to happen again. And, I'll show you again real quick. We had our little break of structure that came in here. You can see it. This was our original 1 minute imbalance. It broke and made another 1 minute imbalance. So if we go back to our swing point right inside here, we'll go ahead and identify our 1 minute imbalance again, just to be very, very clear for everybody. I don't want you guys to have any questions. Go down to the 1 minute time frame. Point it out right there, and right there. Okay, so we know we'll just make these lines bigger. 3. Okay, and then let's go to present time. And again, you can see here, guys, what price did. Get this out of the way. Price comes into our zone initially. Okay, it strikes the zone. Initially, this is price entering our 1 minute imbalance. Boom, it's in there. Okay, so now we'll get rid of these lines and see that price broke structure to the upside. Okay, and it made another 1 minute imbalance. Where did it break structure? Right inside here. Lower low, lower high, lower low. Comes up, taps back in, and flies. You see, guys? So again, these same things happen day in and day out. This is an example of only using structure and chasing imbalances, or order blocks, call it whatever you want. But the idea behind it is, when we look at it, there was no order block, there was no imbalance, there was nothing here but a structural swing point that suggests that if price is going to continue in the same direction, that it's probably going to happen somewhere right in here, which led to the next higher high. That's what makes you watch this zone, guys. So again, I hope this brings some value to you guys, man. That's all we're out here doing. Look, at the end of the day, no matter what strategy you're using, everything you want to know, you just have to look left. You don't have to hear it from me or anybody else trading at a high level. look left, and answer your own questions. We'll catch up with you guys soon. All the best. Take care.